Today on the How to Trade Stocks and Options podcast, we're going to be talking about 3 ways to adjust a put spread that's gone wrong.
This is the How to Trade Stocks and Options podcast, brought to you by 10MinuteStockTrader.com.
Hello, I'm Christopher Ewell. Welcome back to the How to Trade Stocks and Options podcast, brought to you by 10MinuteStockTrader.com. And today we're going to be talking about something that you as a trader may or may not have had to deal with yet, and that's having to adjust a put spread that has gone either in the money or is being tested. And I know I've dealt with about 1,000 of these, and so I've gotten a few different techniques that I use personally whenever I'm putting this on or making these adjustments in my own portfolio. So let's go to the iPad and let's talk through our 3 different strategies here. The first strategy that we're going to be looking at is rolling out in time. And I'm going to go ahead and highlight these 2. Let's say that we sold the 1817 put spread in OIH. And the reason I like to roll out in time is for the number one reason of I have more time to be right. And when you're trading options, there is a definite expiration date, and you want it to be out of the money if you sold the options. And in this case, by having more time, it's just the nature of the beast that you may have more time to be right. So that's the first thing that I do whenever a options trade is tested, is I immediately roll it out in time. Now I also like to point out that I don't generally adjust trades very quickly. The real trigger that I use is if both my short strike that I've sold and the long strike that I bought, if they've both gone in the money, then it's time to start looking. But I have been on the receiving end of whiplashes where I've been very aggressive in adjusting, and then all of a sudden my adjustment has now turned into a hindrance, and I'm now losing on something that would have been winning had I just left it alone entirely. So I'm not quick to adjust, but the first thing I do when I do adjust is roll it out in time.
Now, you need a broker that understands options trading in order to make trades like I make. Tastyworks is a broker platform that I use and I recommend. The platform's easy to use and their pricing is unbeatable. And with their commissions, trades like this would only cost $1 per leg total. Now, if you sign up for a new account with Tastyworks and use the code 10MINUTE, that's 10MINUTE, I'll give you over $150 in exclusive 10-minute trader bonuses from 10MinuteStockTrader.com. Remember to use the code 10MINUTE, 10MINUTE, when signing up for your new Tastyworks account today.
Now, the second option you have whenever you're adjusting a trade is putting on an opposite spread. So I'm going to put spread here. So we talked about time, talked about spread. Now, the spread here that we're talking about here is, let's say that we've got our 1817 put spread that we've sold in OIH. And maybe now OIH is down to 16 or 15. What we could do is we could put on an opposing spread at, let's call it 20 and 21. And our trade was at 50 cents. Now it's at 61 cents. So we've taken in 11 cents of credit. Our original trade had a 50% probability of profit. We took in 50 cents on the trade, which is a good risk to return ratio there, but it's gone in the money, so we need to take in a little bit more credit in order to offset some of that risk. So by taking in an additional 11 cents, that reduces our risk in the trade from $50 to $39. And, maybe $39 is a lot better acceptable risk to you than 50. But either way, that's another way you can adjust the trade. Now, if you want to be more aggressive on it, rather than doing another out of the money opposing spread, we can do an at the money opposing spread. By doing this, we create an iron butterfly. An iron butterfly, as you can see, our trade credit went from 50 cents up to 85 cents. And that 85 cents means that there's only 15 cents of risk left in the trade. But on the flip side of that, you have now really isolated where you could be making your profits here. In fact, where you used to have a trade where anything in this direction was profitable, now you've set up essentially a bottomless triangle here, and that has to fit inside of this triangle to be profitable. And because of that, you have only $15 in risk on either side. But because you only have $15 in risk on either side, it's a pretty low probability trade. You have really got to nail it right here in order for this trade to make money, for this adjustment to work. And the last adjustment that I make is probably not one you're going to like, is to close the trade. Not everything always works out. And, if your original risk tolerance was $50 on this trade, and maybe it's lost half its value, and now you're out $25, maybe it's time that if it's outside your risk tolerance, whatever the case may be, and this is on a $1 wide spread, of course. Now, you could have a $2, $10, $20 wide spread. So you've got to decide where your risk tolerance lies. But, if it's lost half its value, you've really made a 50-50 trade into a 25% probability of profit trade at that point, and it's may not work out in your favor. So there's always a chance that things go wrong, and closing your trade might be the best option. And I know it's not fun to deal with, not fun to have losers, but it is part of the game. I mean, that's part of trading. If anyone tells you that they've never had a winner, or if anyone tells you they've never had a loser, it's because they're not a real trader. Real traders, they make their own calls, and it's just part of the game. Even a high probability trade can turn to a loser sometimes, and nothing is guaranteed, especially in trading. So that's what I want to cover today. 3 easy ways that you can adjust an in the money put credit spread. You can roll it out in time. You can sell an opposing spread against it to take in more credit. Each of these reduce the financial potential loss in the trade and give you potentially more time to be right. And the third option is just cut your losses while you can. It doesn't have to be a full loser. Nobody says you have to keep this on until expiration and take a full loser. You can take it off whenever you want to. That's the way American style options work. You can sell them and you can close them at any point in time.
Our mission statement at 10MinuteStockTrader.com is to empower others to employ the strategic advantages of options trading and to provide confidence that they can profit in any market scenario. Please be sure to give me a like and a comment below and tell me how you can use this in your own portfolio. I have so much more content just like this over at 10MinuteStockTrader.com. There you'll find all the bullish, bearish, and neutral strategies I trade, as well as everything I've traded in my portfolio over the last year. Thank you so much for sharing your time with me. It really does mean the absolute world to me that I've become a part of your day. And like I always like to say, I've been your host, Christopher Uhl, and thanks for stopping by.
Now that wraps up today's How to Trade Stocks and Options podcast. I've been your host, Christopher Uhl, and thanks for stopping by.
10MinuteStockTrader.com content is for information and educational purposes only. It is not, nor is it intended to be trading or investment advice or recommendation that any security, futures contract, options contract, transaction, or other financial instrument or strategy is suitable for any person. Trading securities can involve high risk and the potential for total loss of any funds invested. 10MinuteStockTrader.com and Christopher Uhl, through its content, financial programming, or otherwise, does not provide investment or financial advice or make investment recommendations. Investment information provided may not be suitable for all investors and is provided without respect to the individual investors and audience's financial sophistication, financial situation, investing time horizon, or risk tolerance. 10MinuteStockTrader.com and Christopher Uhl are not in the business of transacting security trades, nor does it direct client commodity accounts or give commodity trading advice tailored to any particular client's situation or investment objectives. 10MinuteStockTrader.com and Christopher Uhl are not licensed financial advisors, registered investment advisors, or registered broker-dealer. Stocks, options, futures options, and any instruments not included here involve risk and are not suitable for all investors. You alone are responsible for making your investment trading decisions and for evaluating the merits and risk associated with the use of any financial security and brokerage platform. For more information, please visit 10MinuteStockTrader.com/legal.
And thanks for stopping by.